The call came at 6:47 a.m., 23 minutes before Jerome Powell's usual arrival at the Federal Reserve. Jamie Dimon's voice on a secure line carried none of its typical Wall Street bravado. Jerome, we need to talk, not over phones, not in offices. This conversation needs to happen somewhere they can't record it. It's not earnings, Jerome. It's survival. Mine, yours, and maybe the whole damn system we built. Powell had known Jamie Dimon for over 2 decades. Through market crashes, regulatory battles, and countless policy meetings, he'd never heard this tone before. Fear barely controlled, but unmistakable. Jamie, if this is about your quarterly earnings, Treasury can handle. 3 hours later, Powell found himself in the back corner of a nearly empty Georgetown coffee shop, watching America's most powerful banker nervously stir sugar into coffee he wasn't drinking. Dimon had chosen the location carefully, far from financial district surveillance, paid for the entire back section in cash, and arrived wearing a baseball cap pulled low. Powell's coffee cup stopped halfway to his lips. 700 million ounces of what? 700 million ounces, Jerome. That's what we're sitting on. The number hit Powell like a physical blow. He'd spent weeks trying to understand why silver had exploded 148%, while gold rose 65%, completely disconnected from traditional market fundamentals. Now he was getting his answer from the last person he'd expected. Silver. Physical silver. More than any single entity has controlled in modern history. More than most countries hold in reserves. Jamie, your bank paid $920 million in fines for precious metals manipulation. You had traders go to prison for spoofing silver markets. Why would you accumulate the same metal you've been suppressing? How long have you been accumulating? Dimon leaned forward, his voice dropping to barely above a whisper. Because we saw what you're seeing now, Jerome. The paper-based system isn't going to survive what's coming. Powell felt the ground shifting beneath his understanding of how American finance actually worked. J.P. Morgan wasn't just another bank. They were custodian of the largest silver ETF, controller of massive derivative positions, and now apparently the world's largest private holder of physical silver. 12 years. Ever since 2012. While our traders were publicly shorting silver futures, our physical trading desk was buying every ounce they could find at spot prices. The CFTC position reports show you liquidated your short position last October. 200 million ounces of paper shorts closed overnight. The implications crashed over Powell in waves. J.P. Morgan had been playing both sides of the market for over a decade, suppressing prices through derivatives while simultaneously accumulating the physical metal at artificially depressed levels. It was the most sophisticated wealth transfer scheme in financial history. Powell studied Dimon's face, searching for signs of the calculated confidence that had defined their relationship for years. Instead, he saw something he'd never witnessed before, genuine uncertainty from a man who'd built his career on absolute control. Jamie, you're telling me that J.P. Morgan, one of the most systemically important banks in America, has been systematically manipulating precious metals markets while positioning for the collapse of the monetary system you help administer. Dimon nodded grimly. Had to. When physical premiums hit 30% over paper prices in some Asian markets, we knew the pricing mechanism was breaking down. We couldn't maintain bearish paper positions while sitting on the largest silver hoard in history. I'm telling you that when your own models started showing unsustainable debt trajectories in currency debasement scenarios, we had a fiduciary duty to our shareholders to position accordingly. Dimon's laugh held no humor. Jerome, we don't need Fed models when we can see Treasury auction data, money supply growth rates, and fiscal deficit projections. The mathematics are relentless. When debt service costs exceed defense spending, when you need to borrow money just to pay interest on existing debt, there are only 3 possible outcomes. The coffee shop suddenly felt too small, too exposed. Powell glanced around, paranoid that their conversation might be overheard by the wrong people. What models? We haven't shared internal Fed modeling with commercial banks, because silver isn't anyone's liability, Jerome. It doesn't depend on government promises or central bank policies. When confidence in fiat currencies begins to crack, physical assets become the only real money. But silver, Jamie, why not just buy treasury bonds or maintain traditional bank reserves? Powell knew the scenarios: dramatic spending cuts that were politically impossible, massive tax increases that would destroy economic growth, or monetary debasement that would silently transfer wealth from dollar holders to asset owners. The third option was becoming increasingly inevitable. They're not the only ones. Yesterday, the Chinese purchased another 500 million in physical gold through the Shanghai Exchange. Russians liquidated 12 billion in treasuries last month. Even the Germans are repatriating gold reserves from Federal Reserve vaults. The politicians are noticing, Powell said, showing Diamond the message. Powell's phone buzzed with an urgent message from his deputy, Senate Banking Committee, requesting emergency hearing on precious metals volatility. They want answers about Fed response to market disruptions. Each data point felt like another nail in the coffin of the post-1971 monetary system. Countries that had trusted dollar-based reserves for decades were quietly diversifying into physical assets. The coordination wasn't coincidental. How much do they know about your position? Diamond's expression darkened. Our custody holdings are reported to regulators, but the full scope of our strategic positioning isn't public information. If it became widely known that the largest custodian bank was accumulating physical silver while publicly maintaining normal banking operations, Powell studied the data, recognizing patterns that confirmed his worst fears about monetary system stability. How long do you think we have before this becomes a full-scale crisis? Depends on how many other institutions followed our playbook. If major banks, sovereign wealth funds, and central banks have been quietly accumulating physical assets while maintaining public confidence in paper currencies, the adjustment could be rapid and devastating. This is what happens when paper promises become less valuable than physical reality, Diamond explained. We're not just seeing a bull market in precious metals. We're watching the breakdown of the pricing mechanism that's controlled these markets for 40 years. Jamie, I need to ask you directly. Is JP Morgan prepared to continue operating normally if precious metals prices double again from current levels? The implications were staggering. If sophisticated financial institutions had been systematically positioning for currency debasement while publicly supporting dollar-based arrangements, then the eventual reckoning would be far more severe than traditional economic models predicted. Diamond's hesitation provided the answer. We're prepared for significant volatility, Jerome. But if silver hits $150 an ounce and gold reaches $6,000, the entire derivatives market becomes unworkable. Banks would face delivery obligations they physically cannot meet. Honestly, I need you to understand that traditional monetary policy tools aren't adequate to what's coming. Interest rate adjustments and money supply changes can't address fundamental commodity scarcity or international loss of confidence in dollar-based arrangements. What do you need from the Federal Reserve? Powell realized they were discussing the potential collapse of one of the fundamental mechanisms of modern finance. Derivatives markets had grown so large and complex that they'd become disconnected from underlying physical realities. When those realities reasserted themselves through supply shortages and price dislocations, the entire structure could implode. I'm recommending that you prepare Americans for a monetary environment unlike anything we've experienced in our lifetimes. The silver surge isn't an investment opportunity. It's an early warning system. And the warning is that the international monetary system is under stress that conventional responses can't address. It was the admission Powell had been dreading. The Federal Reserve's power depended on their ability to influence economic conditions through conventional policy tools. If those tools were becoming ineffective against the forces they were confronting, then the Fed's credibility and authority were at risk. Are you recommending specific policy changes?